So let's move over to Fiserv, and that's a request from Peter, who's on the stream. Good to see you, Peter. And this stock has been under pressure in 2025. It hasn't had a very good year, and I would say that several payment processors. These guys are a payment and financial services company, so they're in the payments industry. They're like a fintech, and it's one of the established ones. PayPal hasn't done all that great. These guys aren't doing all that great. There is competition in this space, and the market just has not liked fintech for a while. In this case here, this stock sold off 26% for the 1 year, 36% for year to date. Market cap 71 billion, revenues 21 billion. The fundamentals look actually quite good. Current PE ratio 21.97, but it's dropping next year to 12. It's a strong buy, 63% discount. And just using my history with PayPal, PayPal is also really discounted. The market's not buying it. It's doing this similar sell-off with PayPal. Looking at their revenue growth, it looks quite good for a big business growing at 8%. That looks pretty good. And the profitable, they create really good profit, tremendous cash flow. The cash flows look fantastic. Gross margins look good. So this one looks really good. Let's take a look at their balance sheet. Maybe the balance sheet's where the problems are, because I'm not seeing any problems yet. It looks like they do carry some debt, roughly about 29 billion, and their debt to EBITDA is right there at the limit 3. So the balance sheets, they get a C. Like if you're grading a class of students, they get a C grade, passing, but not by much. Kind of like a C with a note to the student that, hey, you ought to improve your performance there. You ought to improve your balance sheet is what I would tell Fiserv. So the fundamentals look good. What's the forecast? What are analysts saying? So there's 25 analysts covering this stock, and on average, they're saying it's 63% discounted. Everybody has a price target above its current stock price. Isn't that interesting? And next year, they're supposed to grow at 8%, 7%. These are good growth numbers. They're not going to, be fantastic, but they're good. And the profits are going to grow double digits. That looks really good. This is looking like a stock that's going to be discounted. I can work on the valuation. Can you take a look at the charts?
You bet. So they're definitely on a downtrend since the beginning of March. They took a little bit of a hit during the tariffs, but not much, probably because they're wouldn't be tariff impacted. So they were only down about 13%. But they're definitely, if you connected a trend line across here, they're definitely on a downtrend, trading quite below their 200-day moving average, which is declining. So they're 29 to 30% below that. Their 50-day is also declining, and their 20-day is declining. The RSI has been below the midpoint. Now I'm going to skip that. I'm going to come all the way back to about March. So really been below or just barely above the midpoint since March. So the relative strength is not very good at the moment. The PPO looks almost identical, so it spent most of its time below the midpoint in bearish territory. Accumulation hasn't changed much. Money flow is positive and negative. Looks like it's been pretty flat on average for the past year. And they've really underperformed the S&P, the technology group, their sector, and the sector is also underperformed. So from a technical point of view, they're definitely challenged. If I did want to draw a line across here, just to give us some idea, it would, really need to break above about 142 before it's out of this downtrend. So as long as it's floundering down here or continuing to go lower, that would not be good news. I'd like to see it break above that trend line that I put there, somewhere close to there.
Interesting. So, as expected, I think Fiserv is going to have a really strong valuation. It's going to be discounted. I'm actually in the middle of updating it. And, this space has not been well liked by the market. And these guys have a balance sheet that had a C score, right? So I'm going to move the discount rate to 9%. PayPal's at 8 because they have a better balance sheet. Equity value is 72. So I think my share count is off there. Let me correct that. Share count is 543.59. So on cash, it's actually priced fairly. On earnings per share, next year we're expecting $12.20. It's a slow grower. Man, 18, I guess, is good. And then growth rate is going to be better than that. So there's a discount on Fiserv, but I think the discount on PayPal is better. And they have a better balance sheet. They have more cash than debt. So I think PayPal is a better option than Fiserv. PayPal also has Venmo, which is a very modern business, and they also are already in stable coins. They saw that coming, and they're already in stable coins. So I like PayPal more. Fiserv is discounted to some extent, but for me, it would be a hard pass because I could just buy PayPal. I get a better discount. Now, PayPal and Fiserv have not performed over the year to date, nor the 1 year. It's not, the market's just not buying payment processors. So that's my evaluation of Fiserv, Peter. I know you're a younger investor. I don't know if this is a stock that I would recommend to one of my kids. They're 21 and 25, and I would be like, yeah, rather you go find within financial services, go find the next, Robinhood. Go find a stock that's going to go 600% up in 18 months. This one here, I think, is going to be okay for an older investor, but not the younger investors. I think younger investors got to play to find 10 baggers. And this one here, I don't see how it's going to be a 10 bagger. It's just not liked by the market. Fundamentals are okay, but it's not going to set any records. It also, I think Fiserv has more of a legacy business around merchant solutions. And we'll see where that space goes. There's a lot of competition. So that is Fiserv.